To the market closed. All right, guys. Good morning. Good morning. Welcome back to the morning note. My apologies. I couldn't do the morning note yesterday. It is Tuesday, September 13th, 2022. My name is Carlos Garcia, founder and CEO of GAR Capital. I am your host this morning and every morning at 9 a.m. Eastern Standard Time. Thank you so much for joining in the YouTube channel. I was out yesterday. I had an early doctor's appointment a little more north of me in North Orlando. So it was a drive first thing in the morning. So again, my apologies. I'm fine. I promise I'm not going to die or anything. I had some family over. Again, totally nothing bad. It was all good. That I could tell you. But I'm not going to give all the news here. But we'll talk about the market. Keep it focused on this, not this. Let's go and talk about it. Dow futures down 517 points after being up, let's call it 270 points this morning. Nasdaq down about 2.78%. S&P down 2.14%. Russell down 2.48%. Crude oil down 0.52%. 10-year yields soaring this morning, 3.408. I got out of my TLT position last week. We were down about 9% on that position. Again, I expect rates just to go higher. We're going to go ahead and go over that together here in a second. 10-year yields looking to break out. There is some resistance here around 34.83, which is around 3.4%. So again, I close my TLT. We'll see if we can maybe get in at a better price, a little more of a downside move. Right when the Fed pivots. I think that's kind of the trade we're looking for. We don't see it now, that's for sure, but we got some gaps to fill to the upside on TLT. So again, we're moving on from that. We'll see what we get from there. Let's go to S&P futures as well. Let's go and bring up that on the daily. Good morning, Clifton. Thank you for coming in this morning. Dollar index up 0.88%. I said that on Twitter this morning. I said the dollar will dictate where equities go. So again, we've had about a 3-day winning streak so far. The dollar has been down 4 days and the market has been up 4 days. Now we're up, market's down. The dollar is the key. If we start breaking above 109.40 or so, let's call 109.40.45, just to give us a little bit more room. If we break above that, then we'll look to retest about 111, which is this trend line here. Then I would want to go short if we break above that. But again, you still have some resistance here. So where does that leave us as traders? And we're going to go over that CPI number here in a second. S&P futures, again, took away a lot of lines on the screen. But again, this trend line seems to be the only one holding up. This is this trend line as well. This is your support. 3,900 was support. 36.39 support. 4,300 seems to be resistance. 4,200 being a key level. We rejected near that. So let's go ahead and zoom in on S&P futures. We are now we broke below the 20-day. We are now near the 50-day, and we're nearing close to the 100-day. So looking at it here, if the dollar does reject, then it seems to be that 100-day moving average is going to bounce. But all we did this morning, for the most part, is really fill a gap that wasn't basically needed from yesterday, 40.77. So that gap is filled. In terms of support, the next one is right around 40.16. The only reason I say that is that was resistance back in late August, early September. And again, we are now on the 13th of September. Keep in mind seasonality. So again, you see the 100-day moving average on the hourly. If we break 40.16, that means the dollar will be around 111 and we could short. But in terms of the market here, if we can hold to this 100-day moving average, it's more than likely going to be a bounce back to right around 40.83. But again, with this CPI number and reading it this morning, it's not as terrible as people perceive it. But again, it isn't great either because the Fed is going to raise more rates, is going to raise rates a little more aggressively. Looks like we have an 80% chance of a 75 basis point hike and about a 20% chance of a 100 basis point hike. And again, we have been the best house on a bad neighborhood. That's basically what we've been doing here in the United States. We've been in the forefront of raising rates, and Euro has been the one that has been kind of slow stepping. But for the most part, the dollar is showing strength across the board. August CPI was only up 0.1%. Again, that's skewed with energy. So the estimate was negative 0.1. So that's a miss, hotter than expected. Core, stripping out food and energy, that's up 0.6%, higher than 0.3%, 8.3 year over year. The year over year, again, you're comparing it to last year. I don't put that much view on it. I just want to see that at least on a month-on-month basis, are we slowing down? The good news is that 0.1% is better than a couple months ago. So we kind of are heading in the right direction. But again, I think a lot of traders were looking for that really big drop in number like we did last month. We just didn't get that. So again, inflation is not over. The Fed sees that. They're going to raise rates continuously until we see some really good progress. So if what does that mean? If the Fed is raising rates, again, we know that tech is going to get hit. They're the biggest down today, 2.88%. Higher rates means it's more expensive to borrow. And again, we're going to see now if the Fed is going to raise rates until we get to higher unemployment. I think that's the key here is unemployment. We had a really strong weekly unemployment claims last week. We've had strong jobs numbers. The labor market is still strong, but again, can the Fed raise rates, kill demand, but still kind of keep employment where it is? Look at us bouncing right off that 100-day moving average, 40-40 being support currently. Let's go around the horn and see the rest of the week. Gasoline futures up 0.76%. Crude oil is now red. Let's go ahead and go over that together. Crude oil is now above that 85 level we talked about many times. You could see here on the daily, that was key support. We broke below support, now we're above it. So it seems to be that we're kind of hovering around 90 to 85 right now. In terms of oil, I still have Chevron position that I opened and the dividend portfolio with energy exposure. But other than that, it's been the same song, same dance. How about gold? A lot of people have been asking me about gold. So let's go ahead and get to the 3 week. Really, if you're looking to buy gold, you're probably playing the 200-day on the weekly, or it's around 1680 to 1673. That's the level where you're looking for a bounce in terms of gold. And again, higher rates, higher dollar equals lower commodity prices, including gold, even though it is a safe haven. The dollar right now is the epitome of safe haven around the world. Everyone's trying to stack dollars because the scarcity with raising rates removes the money supply. So again, the dollar is still on the upside. Silver up down 2.19%, copper down 1.29%. Euro dollar 1.0026, still above parity. That's down 93 pips. 144.38, 154 pips for the dollar yen. Bitcoin still above 21,000, 21,475. We still held that $18,300 support. Ethereum 1611, seems like 1900 was so long ago, down 5.62% this morning. We'll bring up the volatility index as well on the daily. And again, still holding that trend line here, right around 2245. Not a ton of fear, up 4%. Again, if we were up around 9 or so percent, then I could see this a little bit of a panic. But again, I posted something yesterday regarding call put options. The put to call options were very skewed to the down to call side or downside. So again, a lot of people are buying protection when they need it, not when you don't need it. In a sense, they don't buy it when it's cheap. They buy it when it's absolutely needed immediately. So in terms of the S&P, where does that put us? Let's go ahead and take a look at it. Again, still hovering around the 50-day on the daily. Nothing has really broken. All we have is filled the gap. And then you have the 100-day. Again, 4016 being a key level for me. And in terms of upside move, let's go to the daily. If we can get back above 4098 or so, that is the 20-day moving average. I'd want to go long there just to confirm. Last week, I played some puts expecting the seasonality to kick in. Here is the seasonality chart. This is based on midterm elections. Let me see if I can get this going on TweetDeck. I know I posted it. Seasonality. Here we go. Here's your seasonality chart. Here's a regular average year, how we move. September, still relatively weak. October, relatively weak. You got to throw in there 87 October and 2008 October Lehman. So that kind of skews the number. Those were real meltdowns. But you could see in a midterm year on blue, we're right here in the middle. We should get that fall here, maybe a little bit of a bounce, a relief bounce, and come back down towards the tail end of September. October, we bottom, and then we soar higher. That's based on seasonality. Now, again, that's just historically speaking. Doesn't mean that's for sure. But again, keep an eye on everything as we move. I want to keep an eye on bonds, of course. I want to keep an eye on the dollar. Look at bonds. Bond yields are moving higher. We got a key level at 34.83. If we break that, now we're starting to really cook higher. Take a look at the weekly chart, breakout across the board, the max chart. Now we're start talking about possibly 4% on a 10-year yield, and that's inverted. keep in mind with the twos and the fives. The fives were soaring today. Again, bonds are not going to be as, let's just call it, appealing when rates are going higher. Why would you want to lock in a current bond yield now when the Fed is raising rates? This is why bond yields are falling. When bond yields are going up, again, guys, this costs more to borrow. Again, for these banks out there, for these companies out there, again, you have HYG, LQD. LQD is more investment grade. That's more like Johnson Johnson, Microsoft, Apple, those guys, the big boys. High yield credit, more the small betas that can access the bond market to go ahead and borrow capital, especially as we are having a slowdown in growth and we're technically still in a recession. GDP, yes, we know, 2 consecutive quarters in a kind of a weird recession. No, again, demand is still out there. Inflation is still relatively high. Growth is slowing, but I can't say it's absolutely cratering either. So every day is a new market. Let's go ahead and answer some questions. Good morning, Carlos. Feels like the bottom is in and we're in capitulation. What scenario do you feel will visit the all-time lows if China decides to invade Taiwan? If China invades Taiwan, I don't think the stock market really matters because then it gets really, really scary, in my opinion. So hopefully that would not take us to the point where, oh yeah, this is where the bottom is in. Really, what's going to create a retest of a bottom, in my opinion, is if the Fed really starts raising aggressively 100 basis points a time. I think we'll get to the point where you broke it, you bought it sort of thing. If we get 200 basis point rate hikes back to back, I think we revisit the lows because that means that a very aggressive Fed that has not pivoted to either pausing or cutting. That's the 1982 effect. That's the 1982 scenario. Are we still in the 2008 scenario? Remember that comparison analog. Well, this is a big week to do it because this is where we started heading lower. And so far, that's where we're looking to be. And I was in puts last week thinking that we were going to have that mid week swoon and then we continued to short squeeze higher. Again, we're still at the 100-day. So again, it's not a complete meltdown. I know 566 points, but we're at a point now that we are only at a level we haven't seen since Friday. So again, we're just revisiting Friday, 9 a.m. That's all we did. Yesterday's move was completely wiped out. So that's basically the best kind of view we can see it currently. Also, is this the buy the dip opportunity? I think the Fed kind of gives us a little bit of a guidance here. I really don't want to put any real chips in as of yet because not a lot of support has been hidden on the names I want to buy. For example, Nvidia at 120 is the level I want to get. How about Google, another name that I want? Google is chilling. It's at 108. Hasn't broken down anything. I mean, we have higher lows and higher highs, at least in the short term. You could see that is holding up. If we start breaking below 106.39, it gets interesting. But look at Apple yesterday. And I had puts on Apple, which absolutely got smashed. But I expected us to fall, and we didn't get that. So Apple had a monstrous day yesterday. Now it's at 160. Now you're right here. There is a gap to fill at 157.68. If that does break down, then we could possibly get a little more of an opportunity to short Apple post their big move yesterday. Do you think we break the 100 and go lower with CPI? Tough to say because I'm looking at the market currently. And again, futures are very tough because you don't have tons of volume either. But yes, I think we get to around 40.16 and then we'll see if we break down. If we do, we're going to get below 4,000 at 39.89. The 200-day on the hourly would be a crucial level. But again, you could see this double top here that we broke out. If we just retrace that, we're going to go ahead and go lower. The question is now, if for anyone that's expecting to revisit the lows, 39.21, that's your trend line down. And again, we sank below that. I remember because I shorted there. Kill me. But we bounced. So it's a very tricky market. So right now we can't speak in terms of absolutes because there is no absolute. Everything is just based on probabilities. And the probability right now is I do believe that at least 40.16 will be tapped. The question is, does it hold? Does it bounce? A lot of the move made now. For all we know, we could fall 1,000 points today and then we could bounce tomorrow. It is a very weird type of market currently where any little bit of news can just move things both ways, either way. So again, as an options trader and as a futures trader, you have to be extremely flexible on your view. Every day is new. In terms of buy the dip, again, you can make it easy. Just do it every week, dollar cost average like I do with SPY-G, And again, you're not worried about timing at all. At the end of the day, you're still looking at the market as something where you want to invest long term. Can you explain what break evens mean? I keep hearing about it, but I don't understand. Break evens, and again, I'm going to go ahead and read you, and this is regarding bonds. Let's see. I think you're talking about the 10-year break evens. I'm going to read the exact definition to you guys. So let's see here. It's the 10-year break even. Again, keep in mind, guys, is the difference or the ratio in a sense between the TIPS, which is the Treasury Inflated Protection Securities, and the 10-year yield. Again, the actual spread between them is your break even. Now, what does that mean? So again, for example, let's go ahead and look at it on Google. 10-year TIPS break even is 242 compared to 241 in the actual previous market day. I think this is old. So again, leave that alone. But again, the 10-year TIPS versus the break-even rate. So again, the difference between the inflation protected yield and nominal debt, same maturity. So again, you know I always talk about the 10-year yields, the 2-year yields, and the fives. Now you're just comparing that to the inflation protected securities, which is TIPS. Let's see here, SPY. Well, let's go and bring up SPY. I always talk about ES. So let's talk about SPY again. You can see this top right here. These double top, or let's call that what it was, a double top. Right here, you're really near it. Right now at 401.29, the question is, do we hold or break down? Take a look at Qs. Qs, the 200-day is your next support. That's right at $300.70. That's our support. If that breaks down, we should continue down a little further. So yesterday it was all good. Market was up, maybe kind of front running the CPI number that didn't come better than we thought. So now we come down. The question is, do we continue to go down or do we tap support? That's always the case. So let's go ahead and take a look at Apple. Why do I look at Apple? Because I have puts on it. There is a gap to fill here, right around 157.62. Seeing a little bit of a bounce here. Let's see if this right here, this line right here, right around 159.79. That's your 200-day. Let's see if that holds. If not, if it does continue to break down, we'll put a level here around 159.49. If that does happen, I want to short to this gap fill at 157.52. It feels like so long that I've spoken to you guys. Again, my apologies. The weekend in terms of football sucked. There was no English Premier Soccer. Real Madrid had a great match. I don't want to talk about the Cowboys. My quarterback is hurt. And yesterday, I thought the Broncos were going to win. I didn't bet on it or anything. I was just watching. But pretty good game. Pretty good game. NFL this weekend was amazing. An amazing weekend in NFL. Again, so glad to have football back. But keeping an eye on the markets. 159.50 is your level to watch on Apple. If that does break, watch for that gap fill below. What's your range on SPY and Qs? Let's go and bring that up. SPY 401.29, we just broke it. So now you have 398 is that 200-day. That's your range. If you go back to the upside, that's the range there, 403.64. That's the 100-day. And you could do the same here for Qs, where 370 is your support. And then you talk about resistance or break above would be 304.25. We'll leave it there, guys. Have a great rest of your morning. Members, I'll catch you guys on the blog. Have a great rest of your day. I will catch you guys tomorrow for the morning note. Cheers, guys.